Now buying 100 shares of the Qs is going to cost us a $5 commission, right? And it's also going to reduce our buying power by $2,300. Okay, well that's the cost of doing business. In our Theta scalping trades, let's get rid of these now. We have just the opposite goal. The opposite goal is the goal is pretty much the same. We still want to make money. Another goal that's the same is we want to be delta neutral, because bringing the current price to a delta neutral position helps us align ourselves with the maximum profit potential of this position. Let me say that again. Bringing ourselves back to a delta neutral position helps us align ourselves with the maximum profit potential of this position. So in order to get delta neutral, if we are negative 248 deltas, what do we have to do to get delta neutral? Well, we have to buy approximately 250 shares of stock. And that's exactly what we did. In this case, rather than buying 250 shares, I'm going to buy 200 shares and stay slightly negative delta. It doesn't have to be perfect. 200 shares puts us almost directly into a delta neutral position and helps to maintain. It does decrease our maximum profitability a little bit, but what it does is it keeps us in the center of our profit graph. So even if the price were to move, now as we get farther up, let's say we buy 200 shares of the Qs and the price moves up to 48. Let's take advantage of the Thinkorswim platform and advance the price by $2 to 48. Now on the Qs, that's a big move. Okay, now we're way over here. Our price has moved to 48. 48.27. We're currently in a negative delta position of 456. But we move from 46 to 48. So we've made 2 points on our 200 shares that we were long. The problem is we're still not delta neutral. In order to get delta neutral, we have to go back and we have to buy some more shares. In this case, we have to buy another 400 shares of the Qs. Now we're long 600 shares, okay, but we are delta neutral again. Again, our maximum profit has been reduced. However, we are delta neutral, which means, and let's advance the date here, for each day that we increase in time, the more money we make because we are delta neutral. Let's take this 400 share stock off. If we were not delta neutral, we would still be in a losing position. Let's go back to the current date. We're currently down $475. In order for us to make any money at all, we would have to advance the date almost to expiration, past August expiration, all the way just to break even about 14 days. But by buying these 400 shares, we would be in immediately a positive, we're in a delta position, a neutral delta position that we put ourselves in originally, and now we have a profit of 688 shares, $688. Let me reset the time again. And I'll take off both of our stock positions. We're way over to the right side of our graph. And today is, today's the 8th. So we are in an extreme negative position. We're losing $823. We're 656 deltas short. In order for us to become delta neutral, we need to buy 600 shares of stock. But because we didn't adjust soon enough, we adjusted a little bit too late, but we still adjusted. So we still have a small profit here. The problem is we're getting very close to the end of our graph, at which time, even if the price does start to move up, we're going to make money because we're long 600 shares of stock. Let me go back and adjust this again. This is our current position. We're short 248 deltas. I buy 200 shares of the Qs in order to get delta neutral. Let's progress time. Let's say the price had a big move up just recently, and it went from 45 up to 46.27. Now we've hedged. We bought 200 shares of the Qs. We are delta neutral, and now for a couple of days the stock just sits there. Well, each day the stock just sits there, we increase our profit for the day by $46, which is our theta. After 3 or 4 days, we're still delta neutral. The price barely moved around the center, and we continue to make money in this position. Now, if the price were to continue to move against us to the upside, let's say it goes up 1 point. Well, now we're 300 deltas short. We already have our 200 shares long that we bought back when it was at 46.27. Well, now we're $200 richer because we're long those 200 shares, but we're not delta neutral. So now we have to go in and we have to buy 300 shares. Now, once again, we are delta neutral. A couple days more go by in which nothing happens. We are now profitable by $460 in the position, and we are long 500 shares of the stock. Well, if the price continues to move up on us, we become short 231 deltas. Well, we've already gone from 46.27 all the way up to almost 48.27. That's $2, and we were long 500 shares of stock. We made money on 2 points on the 200 shares that we bought at 46.27, and we have another 300 shares that we bought on the last point. But now we're short 231 deltas again. So now we go ahead and buy another 200 shares. Now we're long 700 shares, but we are delta neutral. And now we have a profit of $677. Once again, the price doesn't move. In other words, what happens is every single time that we adjust for our deltas, we put ourselves in a position in which, as the day goes by, our theta is working for us as much as possible. In other words, if we're way down here, if we're way down at 44, we're losing $1,200. It's going to take us a long time to get back to a delta neutral position. It's going to take us a long time to get back into a profitable position. By adjusting to become delta neutral, you put yourself in the center of the graph, not the center of the profit graph, but the center of the current profit and loss graph. Not our expiration graph, the current profit and loss graph. So that each day we can collect the full $40 in theta that we have coming as for holding this position.